we have had a solid quarter. We came in the midpoint of the guidance, and we have sustained our operating margins quite well. To specific question that you raised, it is an excellent market, I would say, from demand standpoint. And when you are in a position like this from a demand standpoint, it naturally puts pressure on the supply side, which is reflected in the attrition level. And of course, it is also reflected in some of our cost structures, which have gone up over last few quarters as we had to pay continued premium as we hire lateral candidates from the market. So overall, yes, there is a premium, maybe 25 to 30% on lateral hiring for similar positions from outside. But the good news is that we believe that attrition is now stabilizing, and we should see the tide turning in next couple of quarters.
Are you able to share with us some forward guidance for the coming quarter, for the fourth quarter?
Yes, absolutely, Mehdi. We have guided 2 to 4% in sequential terms, which translates into 28 to 29% year-on-year growth. It is a robust guidance. It is a great environment, and we are looking forward to a good execution in quarter 4 or March quarter as well. This is, of course, on the constant currency rates that we have shared in our press release.
You mentioned at the beginning your margins, your IT services operating margins were over 17%, but nonetheless that was still a decrease quarter on quarter. What's your outlook for margins, also given the fact that you certainly hope and believe that the attrition rate will stabilize in coming quarters?
Our sort of a commentary on margin is that we want to sustain it in 17 to 17.5% range over medium term, which is over next 4 to 6 quarters, which means more of our results will fall in that bracket, and some could be higher than that bracket or lower than that bracket. But in quarter 3, we were at 17.6, which was higher than that bracket. And of course, there was a 20 basis points odd reduction from quarter 2 to quarter 3. And that was driven by some of the investments which we have made in our talent and in increasing our bench strength, which gives us headspace for growth in quarter 4 and beyond. So they were predominantly operational investments to further enhance the growth trajectory. Going forward too, our priority remains growth, and almost simultaneously, therefore, the talent retention and talent growth. Now, subject to this to being the first priority, we will endeavor to maintain our margins in the medium-term range that we have spoken about.